Nintendo just released its quarterly earnings, and I just wanted to address in this video whether I regret selling the stock out of my portfolio, if it changes kind of my analysis of it overall, and if I consider adding it back. So you can see this morning the stock had quite a big drop. I mean, it was down 2.83%, but then it did end up recovering it later in the day. Jumping over to the financial highlights, you can see Nintendo had a big jump in net sales, with just a really large jump year over year as expected due to the launch of the Nintendo Switch 2 and how well that did sell. Even compared to analyst projections, Nintendo did really solid, really outpaced the analyst projections just due to how well that console has sold so far, all the software sales going along with it. It did beat operating profit projections that analysts had as well, but by not near of a big of a margin. I want to say the analyst projections were like 53 billion yen, and its actual operating profit was like basically 57 billion yen. Now, this is kind of the concern to me, at least, and why I am still glad I ended up selling the stock, because if you look at their operating profit year over year, it's actually not that much better. And then down to their consolidated financial forecast, they did mention they're still expecting to sell 15 million units of the Switch 2 in the 2026 fiscal year, which, based on how well it's been selling so far, I was a little disappointed to see them just hold that guidance. I mean, maybe they're trying to be conservative, but at the same time, you can still see they're projecting operating profit of 320 billion yen. And then really, when we compare it to the fiscal year of 2025, it is going to be an improvement, but not a huge improvement. So even though right now at the current price and the previous dividend, Nintendo's sitting about at a 1% yield. Even if we get a moderate 10 to 20% increase in operating profit because of Nintendo's variable dividend rate, we do expect that dividend to jump up a bit, but it's really not going to tangibly or just dramatically increase that dividend to the point where I would want to hold it in a dividend portfolio. Maybe it goes up to 1.25 or a 1.5% yield, providing the price stays the same. Maybe they beat a little better and do a little better on operating profit than they project. But at that 1.25 to 1.5% dividend yield, it could end up being a little lower, a little higher. But based on the target yield of my portfolio, I just don't feel like this is a great fit, unfortunately. I'll still be keeping an eye out on the stock. I mean, thanks for watching, and let me know what your thoughts are.